Hello traders, hello everyone, hope everyone is doing well. Welcome to our new webinar. So after 2 weeks we are back online with our regular webinars on Monday. So just please let me know in our chat box if you're watching obviously here on YouTube, if everything is fine. As you know, I have been away for 2 weeks. Had some pretty good time with my family and friends for vacation. Now trying to get back into the markets. As you know, I will need a couple of days to get a feeling for the markets. Of course, I always keep one eye on the markets, but most of the time obviously I spend it with my family. So now I'm here ready to give you some fresh outlooks and fresh updates. As you know, we have seen a pretty sharp decline here on stocks, cryptos, and some other markets at the start of the month. It was due to the speculations that maybe we are again entering recession because the non-farm payrolls report showed weak jobs data. But then last week we got this US retail sales, which had a pretty nice strong number there, and also the inflation, which was the most important data from last week, has softened. So everyone is now just waiting what Powell can bring in, or can announce in Jackson's Hole this week. If maybe he will be even more dovish. It's all about how much they may cut in September. Okay, obviously the markets are already pricing in the cuts. Now just the question is if maybe Powell will disappoint and not bring enough of cuts to send these markets even higher, or maybe he will look, let's say, for 50 basis point cuts or something like that, and we'll see very nice move continuation higher. So looking at the updated chart here of the S&P 500, clearly we stabilized at the at the upper side of this base channel, and it happened immediately after very strong decline. As you know, obviously these sell-offs are driven by fear, and this is clearly visible through weeks. And if you known as fear index, and if you recall, we've been saying that VIX is at the support, so that's why we've been calling for potential deeper correction. And this correction obviously unfolded in 3 waves very nicely here. So looking at the 4-hour time frame, I just think that here we have all information that are needed for us to maybe to look again back towards the all-time highs, because we have seen a pretty nice and deep retracement that has been made by 3 waves, and now you have a very nice and strong rebound, also breaking this trend line resistance. So obviously we are turning bullish here. Of course, sometimes corrections can even simple ones will become even more complex, but in such case you would need an overlap with 5,358, because obviously wave 4 should not trade into this territory. But if this happens, then can be a triangle, can be a flat, can be even maybe something else. But overall, I just think that for now we have to always try to stick with the simplest wave count and not complicated things. Okay, so here we had 3 waves down, very nice sharp recovery with an extended third leg, which is usually the case within impulsive structures, and you have a broken trend line connected from all-time high. So certainly I'm expecting more upside, and I'm just wondering if maybe we can stop at the current resistance maybe here in the next few days, maybe then make a pullback, maybe even, who knows, Powell will cause a sharp drop and then we reverse higher. So my assumption is that at some point we will see a pullback, and I would be willing to look for potential long opportunities after wave 4 dips. So I think that that's also potentially a very interesting timing if we get this pullback, of course, when dollar can see more weakness, but hopefully after we get some retracement, so that you get some better levels to enter. Also here there can be a potential head and shoulders bottom formation in the making if this resistance would really hold, but it doesn't mean it will. It certainly did here 2 weeks, 3 weeks back, when market stopped perfectly at this gap here, the small one from July. So this gap was filled, market turned sharply to the downside. It's been wave C and now we are recovering. So a lot of liquidations obviously happened down there, but I just think that all of the markets are still on track, as we have been talking over the last and tracking over the last few weeks, few months. Risk on is back, and what I think is going on is that dollar still will see even more weakness with the US yields. And it's very interesting to see that US yields have seen a pretty nice and strong drop. Actually, they already bridge the lows of wave A. Okay, so we can basically be moving into the late stages of this wave C. But if you will zoom this in, actually wave C should be structured by 5 subwaves, and that's definitely not the case from that highs, okay, of April of this year. So I'm thinking that we are now in a corrective phase here and that more weakness will be seen. Ideally, we'll see a drop back towards 3.25% or so, okay. And at the same time, obviously what I would be looking for is that because of the correlations, of course, the dollar will continue to the downside. At the same time, stocks should revisit the highs. Now, looking at dollar index, our primary wave count still shows that we are here in a bearish triangle formation, and notice that we are currently testing this trend line. Okay, it's the trend line connected from 2023 lows. So maybe we see some stabilization this week, but the idea is that if we see a rally, most likely their next resistance should be very strong around 104, from where I would be expecting more weakness. But of course, you never know if Paul will be very dovish on Friday, then possibly we may continue straight to the downside if this trend line is broken successfully. So I think that the most important will be to watch and observe the weekly close price, because on Friday, when we have a very important event, even if we see some very strong sell-off before Friday, you still on Friday, when it's a very important event, the price action can be completely different and can reverse. So the most important will be the weekly closes. But overall, I just think that sooner or later we will break down towards 100 level, if not even lower. Also, looking at the euro dollar pair, here we are trying to break out. Some very nice trend lines already being broken here, but still not really convinced if the triangle is already finished. Okay, because wave E was very small, and if we look and compare it to the previous legs, I just think that there's still a chance that this is actually a wave D rally. Okay, but we will see what will happen up there. Also, even some kind of a small wedge can be happening. So that's why I'm saying that maybe this week's closing price action could be very important and can tell us a lot more of what is going on. But even if we see some pullback, still it will be temporary and part of ongoing uptrend, which in my opinion still will continue this year. So looking maybe and refresh some of our weekly charts here. That was a very nice 5 waves up from 2022 lows, and now you have this correction going on, which unfortunately is becoming complex because it's a triangle, but still it doesn't mean it's a bearish pattern. It's still a bullish structure, and sooner or later we should clear out these 2023 highs when real moves, big moves may start to unfold. Okay, so you're now in a corrective phase here, which I also have labeled for those who are not that familiar with the Elliott wave principle on this chart. So that's 5 wave movement. That's how is the basic, that's what the basic structure of the Elliott wave pattern is. So 5 waves in one direction, 3 waves counter trend. But of course, this corrective phase, it's not always just simple in 3 waves, can also be sometimes complex, like in our case, even a triangle. Now, looking at cable, now cable I think can see more upside, but we're not breaking the trend line just yet. So what I'm looking at here is at a triangle. So it's an ABCDE pattern. I'm wondering if maybe this triangle can hold as a resistance and we see some kind of a pullback here, or maybe that's even some kind of wedge formation. Who knows, maybe even ending diagonal that will take us here above these highs. But in either case, after the next pullback, I think that there can be more upside. But rather than cable, even if dollar would stay weak, I would look at the euro, because looking at the euro pound here, well, we have some very nice rebound happening since end of July. So that was a pretty strong rebound, and now you can see that the market is trying to make a pullback. And if you look back here, that was pretty important level here around 850. So I think that's still a very nice potential strong support here, from where we may bounce either into fifth wave of wave A, or maybe we are already in wave B here. In either case, the pullback from the most recent swing high looks corrective. Even head and shoulders pattern here, bottom formation, could possibly be playing out here. So watch out for the support around 8500, and I really like this one, and we'll definitely have a very close eye on it, because I think that there can be a lot of more upside potential, especially if we start breaking at some point this 8640 resistance. Also, Aussie is on the move after this very strong sell-off that occurred at the same time when obviously stocks also fell. So commodity currencies will normally be very sensitive to stocks, but now when we are back in bullish mode on stocks, I just think it's not a surprise that even Aussie is recovering. Also, you have metals that are doing very well. Gold recently hit new all-time highs, and that's something that should play an important role for Aussie bulls. However, looking at maybe the daily chart to give you the better perspective here, keep in mind that we just recently stopped at the lower side of this very big range, which actually is now in play for more than 2 years or 2 years or so. So it's actually a triangle that I'm tracking, an ABCDE pattern, and now we just completed wave C. So unfortunately, we are still trapped in some very big range. Just wondering what will happen here at the upper trend line here. I just think that it's good to be aware of potential wave E retracement, maybe still this year. But again, even if we see some pullbacks or stabilization here, it doesn't mean that market will turn bearish. I just think that as long as we are trading above this spike here, it's a very good and strong support that market will actually rather break to the upside rather than back to the downside. So I would watch this as the first critical level. If it's broken, then I just think that something going on and even bearish is in the cards here on the Aussie. But as long as we are holding this level, I just think that there is very nice upside potential. Now, looking at also the dollar CAD may not be a bad idea, because we recently have seen a very nice reversal here back to the downside. It looks like that we could be dealing with impulsive sell-off. So I'm just looking for more dollar weakness on this one. But tomorrow, the reason why I bring this on is because tomorrow we had the CAD CPI data. Expectations are 2.5 down from 2.7% last time. So if maybe data will disappoint, if inflation will not soften as expected, then of course it means that dollar CAD could potentially see even more weakness. But of course, if you want to be looking for potential shorts while the market is trading below this level here, then obviously you should firstly watch for an ABC rally, because that's definitely something that will bring you much better levels. Okay, so that's very nice resistance. Not only here that represents 1.3750 is this wave 4 resistance area, you also have the same level that acted as that was the swing high here back in July. So I think that's a pretty interesting level, but it doesn't mean that dollar CAD is in a new some kind of a bearish trend. That's more like a short-term view, because we recently stopped at the upper side of the range. So I'm just thinking that we could be possibly headed even to the lower side of the range. Let me check this trend line here. Okay, we are now just at the trend line trying to break out. So maybe, yeah, it could be time for some pullback here, going into the start of new week, and then a new sell-off. That would be ideal scenario. Now looking at the dollar yen. Now, as you know, we have been looking for this wedge formation dollar yen for some time. We have seen some very nice and strong reversal. And what's the most important about the ending diagonals, that it will take time for top formation to show up. But whenever it does, the market will make immediate, very sharp moves in the opposite direction, and can very fast quickly erase all of the previous gains in the uptrend, okay, or losses in a downtrend. It depends in which direction the market is trading or this ending diagonal is forming. But overall, we have seen a pretty nice strong, there's still maybe chance for 140, but keep in mind that maybe Japan, maybe they are satisfied with the current reaction on Japanese yen. So maybe they will slow down their rhetoric now and try to keep dollar yen more stable. But there's still a very big divergence, obviously, between central banks, and that's something that is driving this pair to the downside, okay, between US and Japan. But what you should not overlook, obviously, is the correlation with Nikkei, okay? So Nikkei, as you know, has seen a top formation the same time when actually Japan intervened in the market, when we got this lower inflation data at the same time from the US. And that's when also not only Nikkei, this has had an impact on other major indexes as well. But what we are seeing right now, so the correlation between Nikkei and dollar yen obviously is there. But what is happening right now? Well, stocks are back in risk on mode, and even Nikkei is doing some very nice strong rebound. Yes, we have seen some reversal to the downside today, but nothing aggressive so far. So I'm just wondering if maybe because of this rebound of Nikkei, that we will see here possibly more upside, that maybe dollar yen is going to stabilize and find some support. We clearly should keep an eye on 140.50. This is the very nice potential strong support. So I would not be surprised if we will see some kind of a higher degree recovery and then more weakness. Of course, there still can be a retest of that of new lows before this happens, but overall just keep in mind that the first drop here sooner or later can come to an end, and if stocks will continue to the upside, it will be much easier for dollar yen to stabilize. So just keep in mind that if you want to be short dollar yen, you have to consider what's going on with stocks. It would be much easier to be short dollar yen and be long Japanese yen in general when you are in risk off mode, not in risk on mode. But then there's also a correlation with the US yields as well that we should keep an eye. So if the US yields and dollar yen correlation will be there, then of course these shorts can still work out. But because of Nikkei, I would be very, very careful. Also, looking at the German DAX, now this one has a very, very nice price action. In fact, notice that wave 4 has a very nice pullback, okay, compared to wave 2. So it was very equal retracement, and not only in points but also in time. You can see that here we had like 65 days to unfold this correction in wave 4, while here we had slightly more. Let me check. We had like 57 days. So basically very similar correction, and that's totally normal because it's wave 4 and wave 2 are of the same degree. Okay, so what's the most important right now? Well, we stabilized with bottomed clearly, meaning that we are back in bullish mode. This cannot be counted as an impulsive, some kind of a bearish formation from the highs, because drop is definitely not in 5 waves, is looking to be like, you can even count it in 3 waves like an ABC or even WXY. It doesn't really matter at this stage because you have a pretty nice and strong rebound. So I'm thinking about more upside, and I'm looking for 19,000 to be out in the next few weeks. Maybe we will have to wait a few months if we will see some kind of a pullbacks. But even if we get a pullbacks, I think that would be very interesting for potential opportunity on the long side. So German DAX, same like S&P 500, I think that they are showing a pretty nice and clear wave structure there. Now let's take a look on gold. So gold came to the upside, hit the new all-time highs, but again, of course, there are room for 2,600. But keep in mind that you are moving out of a triangle. Okay, so don't get too excited about the potential bullish trend here, because sooner or later even this recovery will obviously come to an end. Of course, there's still room for some upside, but if you're long gold already from much lower prices, then just keep in mind that maybe it will be time to trail your stops higher, or maybe even adjust your positions. Overall, I still think that there is room for 2600, if not even higher. But again, it's a fifth wave, and whenever you see fifth wave coming out of a triangle, well, you should be aware of limited upside. Maybe it's time to look at silver, because gold silver ratio, I think at the end of last week we have seen a reversal to the downside. So if metals are really back in uptrend, okay, then of course not only gold, silver is also the one that should do well. And gold silver ratio has recently turned to the downside, so it means that maybe silver will now try to catch gold a little bit here, and we definitely have some very nice reversal going on. We bottomed around 26.50. More importantly, we haven't seen an overlap with this 25.90. okay, so it means that that's still a totally valid wave 4 pullback, and that we can resume higher. But if we start breaking from any reason below $26, then I just think that very good, very strong support, which 26 definitely is, if this support is broken, then unfortunately we will have to adjust the fuse, and possibly this will even open, this breakdown would even open a room for lower prices. But for now, we are still bullish. It looks very, very nice, and it already shows some impulsive characteristics here on a smaller time frame. I'm looking here at the 4-hour time frame chart, and notice that we recently recovered. Let me zoom this in. We recently recovered above this base channel, which is now trying to act as a support. There's some resistance around 29.22, but if we can pass this one, then I really certainly think that we are in a wave 3. Hamido, hello, how are you? So that's for gold and silver. Now let's take a look maybe on some of stocks. Firstly, maybe on nvidia. So on nvidia, as you know, we have been calling and looking for this deeper ABC retracement. We've been actually comparing the current post-earnings cycles to the previous ones, and it unfolded, I mean, textbook, perfect example. And also we recently filled this this gap from May 21st, and now we are recovering. So it looks like that was a correction, and that we are back in uptrend. Maybe some resistance here still, or maybe just some slowdown could happen in the near term. Keep in mind that we have earnings, I think it's next week, Wednesday 28th. So don't forget that on latest earnings back in February and then in May, we have seen a very strong numbers, and this then pushed to the upside on nvidia had a very positive impact on all stock markets, especially major indexes, obviously. So I think that again, it really will be important to see what kind of figures we will get out from earnings at the end of this month on nvidia here, because if earnings again will be strong, I think that this can keep markets in uptrend across the board, technology sector in particular. If suddenly markets data will disappoint, then of course this will have impact on stocks. So just be there on Wednesday, because I think next week, because I think this should be very, very important. But looking at the wave structure, as I said, we had of these 3 waves of retracement, so I'm thinking that more upside should be seen. And it's not only that, we also have Meta that I also posted on Twitter when I was away last week. And I said that probably we are here in a triangle looking for more upside. Maybe even triangle can be finished here. So next pullback still, I think it shows very nice bullish pattern. On dips, there can be a new opportunity on the upside, especially as long as we are holding this trend line support. I think that there is still an uptrend. Also, if we look at AMD here, as you know, weeks back, months back, we've been highlighting this bearish ABC pattern because it was a very strong reversal. Then market stopped at the upper channel line, so clear textbook formation of a correction, and now we hit a new lows, and now we are trying to stabilize once again. So this one, at least in the short term, also is pointing for a recovery. I will not say that we are going back to these highs here that we're seeing in March. But certainly in the near term, I just think that there is some room to make money on the upside. There's also this gap, unfilled one, that maybe still is yet to be filled. Okay, so after the pullbacks, after some healthy retracements, I just think that this this thing can resume even higher. Now, if we take a look also maybe on Tesla, Tesla here is still, in my opinion, trapped in a very big triangle that we talked already months back, and we recently came to the downside, but notice that that was a pretty sharp fall. So wondering if this can be maybe even an impulse for wave A, and that there will be still another retest of the lower prices for wave E before the whole triangle can be finished. Also watch this unfilled gap then in such case around 245. If this gap is just filled and you will see a reversal to the downside, then obviously this gap should be important, because whenever they are filled, market can reverse, and those gaps in such case can act as a resistance in our case, because there are some unfilled orders in that area, and whenever orders are executed, flows can change, and that's why we should be very careful up here. But if we start breaking these gaps and then even cross 271, then I just think that triangle is already finished. So on the short term, maybe there is some room left for 245. Longer term, definitely bullish. But if you're more like a medium term trader, then maybe you should wait a little bit longer for this triangle to complete wave E, slightly lower prices. Now, if we look at also semiconductors here, we have seen a pretty sharp, strong decline. Not really convinced if that's all about the wave 4, or maybe will this be more complex, because certainly it was a very strong fall. But what is important at this moment, at least for me, is that this recovery is also very sharp. Okay, so even if the rise will be in 5 waves or just in 3 waves, there's still room for more upside. Also an unfilled gap up there. So after the next retracement, I think that there is room for more upside, and that's something that could also keep the technology sector. It means the technology sector can stay strong here, and possibly this can have positive impact on cryptos as well. Firstly, if we look here at the Bitcoin, these are actually exchange inflows, okay, to all exchanges, and you can see that there was some spike, okay, a lot of inflows increased here on August 5th. And that's the same time, obviously at the time when we have seen this strong sell-off across the board, especially after these jobs data in the US. So then we have seen very strong decline on stocks. And as I have been repeating in the past, if you see stock market moving to the downside, there is a very low chances in a strong risk-off mode, not just temporary, some small pullbacks. Then there is a less chances that cryptos will just easily continue higher. Okay, it's all linked, the correlations are all there. So if someone is going out of the stock market, then obviously they may liquidate some of the positions on cryptos as well, because it's much more volatile. So what happened here? A lot of liquidations occurred. Traders were feared that there will be much more weakness coming on, and that's why you have these exchange inflows that increased drastically, because not everyone, but a lot of speculators wanted to sell their coins and exchanging them for fiat, because they were afraid that market will continue to the downside. And whenever you see this kind of a pessimism, well, keep in mind that there can be the completely different moves behind or after this kind of event. And so far we have seen some very nice reversal, and I'm thinking about more potential upside here. Of course, there are some alternate counts that we will discuss. But before we go to the wave counts, still, this has been a very nice deep correction, 50,000, very nice, strong psychological support. Probably a lot of liquidations happened here. And what I really like so far is that there are more liquidations, more stop levels at higher prices rather than at lower prices. If there would be a lot of liquidations here below 50,000, okay, below the recent lows, then obviously this would tell me that maybe that's like a magnet. The stop losses are like a magnet that prices want to reach and then reverse. And we are not seeing the liquidations, a lot of liquidations down here. So it looks like that speculators are a bit skeptical if their market is really bottoming or no. But what is interesting that there are a lot of shorts going on because we have plenty of liquidations at the highs. So it looks like that there can be room for market actually to trigger this area at some point. Not sure if that will happen from current prices, from lower prices, but what we are seeing on some of these nvidia, AMD stocks, technology sector, how the S&P 500 is doing, how dollar is acting, I just think that, and also based on this inflows, I just think that there is a chance that market will continue higher here while the market is holding and trading above these lows. So watch out for potential more upside. And if you look maybe even at the total market cap, clearly, I mean, that was a very nice sharp decline, sharp reversal. What's the most important at this stage is that if you look at this price action, okay, you can see that that was a very sharp move, and now we are just actually going sideways. So I mean, typically, and based on Elliott wave personality of the each lags, clearly this looks like an impulsive activity, and this looks like a correction because it's a pause. So market is a little bit confused here, but whenever that's the case, you should look back where was the previous very strong reaction, and clearly that was from the most recent lows, from 1.7 trillions. So I'm thinking that more upside is in the cards here, especially because if you look at this structure very closely, then I mean, it's very difficult to count this. Some will say, okay, that maybe this will transform into some kind of a triangle. Some will say that that's a WXY, that maybe we'll see another swing low here. So you will have a different interpretation, but it's very hard to say that that's the bearish impulse from the highs because you have overlap. So that this kind of idea is completely out of the table. So it means that market should, not it should, but most likely it will resume higher because that has a corrective look here, right there. Okay, not sure if we'll see straight move to new highs or something like that, but certainly we can pass this 2.14 trillions, I think, in the next maybe few days, few weeks. We will see. But overall, I just think that this recovery is still ongoing. Looking at Bitcoin, here's our primary wave count because of the reasons that I just described. So we have stocks doing well, we have some of single stocks doing well as well. We have dollar that is showing weakness. So I'm thinking that maybe this correction is finished. Watch out for more upside. Also, of course, if we break 62,000, this could very quickly send us to the upper side of this channel. So at some point, I certainly think that Bitcoin should pass these highs, because if that was a corrective retracement, then this correction should be fully retraced. An alternate scenario, let's say that I'm wrong, that market will start breaking sharply to the downside. The alternate scenario is that we will still see another retest of 49,000, and that correction unfortunately will then be much more complex, but it doesn't mean that market will be bearish. Okay, the correction will then be just more brutal and deeper, but still, in my opinion, part of a hard degree uptrend, because if you will look at these charts, then you can clearly see that we are in uptrend and that's a correction. But sometimes it's just not easy to confidently say if we are bottoming, completing wave 4 or no. But so far, what I see across different markets, it really looks like that at least in the short term we can see a bit of more upside. Now Ethereum, this one has changed a little bit because the pullback was quite deep, so we thought that maybe triangle is the best approach at this stage, but still it's a bullish pattern. Unfortunately, it can keep us sideways here for even lower, for even longer. But overall, I just think that even this market can stabilize around 2000. We came pretty close. Maybe another retest will follow before the market recovers, but overall I just think that that we certainly can stabilize, because we have 3 waves down here from the most recent swing highs. And if stocks will do well, if dollar will continue to the downside, then of course Ethereum should also stabilize around 2000 area. Okay, traders, I hope that you enjoyed this presentation. Someone asked, can you do the Nifty 50? Let me check if I have it here. I think I had somewhere. Just give me a second, please. Because I know I've done some analysis in the past. So by the way, you can Alpha the Doctor, you can still check maybe our Twitter feed, and you will be able to find Nifty there. I think I shared it there a few weeks back. In just a second. Okay, so that's the chart actually that I shared a few weeks back on Twitter. Someone asked for it. So still, I mean, it's a very nice, very strong uptrend here on Nifty. But notice that we have 5 waves up with an extended wave 3 that also reached the 261.8% extension of wave 1. So that's the area where we could potentially see some limited upside. We have already seen some reversal back to the downside. It doesn't mean that market will turn bearish or something. It could just be chopping around here. But if someone wants to join the trend, definitely you want to keep an eye on some kind of a pullbacks and corrections like this here, like this wave 2, for example. So on any very big dip, I just think that market could quickly stabilize after wave 4. But of course, this can last before this will really show up here on this chart. And it's definitely an uptrend, and sometimes even 5th wave can be extended as well. But it's a bit high and late looking at the current structure within wave 3. Okay, so I hope this you're satisfied with this analysis. Okay, guys, so that's it from me for today. Again, if you want to join our services, wavetraders.com, you can check our member plans, what we have to offer, and you will get this kind of updates also in intraday charts daily in our website. Traders, have a good day, trade well, and talk to you soon.